Hopefully you guys are doing well. I want us to review how price did yesterday and how we managed to get an L as of yesterday, and also try to talk what price is currently doing and how can we maybe engage today. So yesterday was a bank holiday. Then I think it's a day I don't want to get involved because you can see the price action over here. And also I went back and tried to look when last did we have any news event, and I realized on 20th January you can realize this was also a bank holiday, and price didn't actually move that much. So on Monday 20th, this was the price action during the news, and later on you can see later on the market expanded after the news event. So also with these Mondays price action, I don't think it's really legible for us to be trading bank holidays. Mondays bank holidays, just wait for other trading days because those are the higher probability days. Not that I didn't know this, it's sometimes you find ignorance takes the major part of us, and we actually actionalize because we had missed the market. But that's a wrong move, and I think as of today bank holidays is a thing that we should avoid. But nevertheless, what did we see and where did we get wrong, and how can we correct that? So we had this daily immediate rebalance. Remember, we have this weekly fair value gap, which wanted to see the market drop into, then of which we can see how price reacts off that going higher, because long term wise I'm very bullish on gold. Right, I didn't also notice that we had the immediate rebalance over here that we had tabbed on early Sunday. Then the market started consolidating, but later on, as of today, I did go back to the charts, to the weekly, and you can see we had only the weekly fair value gap marked up as the context area, but somehow I don't know how I forgot, we had the immediate rebalance, which we have currently staying into and displacing higher. As of the daily time frame, you can see the Monday candle, consolidation candle, and currently what we are seeing is as of Tuesday, we have currently swept that the previous day's high, and currently we don't have any clear structure over here, though we have a bearish engulfing candle, which also will be very careful of it to see whether price might be dropping to these liquidities. But price action of the lower time frame will confirm to me that we didn't really have any displacement with fair value gaps around this area. So the only bearish argument that we have is only the bearish engulfing candle, but remember that is also against the long-term higher time frame trend, which is bullish. So for now we will be favoring more of a bullish scenario, because also we have relative equal highs at that point in time. Also we are reacting off a context area, though we have this weekly fair value gap left very open. Also somehow the fair value area, the daily fair value area, seemingly seems to be respected, right, slightly below the weekly fair value area. But let's see what happened yesterday first, then later on we can see how today gonna be printing out. So as of yesterday, we saw the market deliver to the previous day's daily immediate rebalance, which I wanted to see some kind of reactions of that level dropping onto the lower time frame. We saw that we had that engulfing candle ranges. We divided into the four parts, the range, this range, and you could see that price had already reacted to the 0.25 level. Price had already delivered to the 0.25 level of the engulfing candle, and also we had us turn into this daily immediate rebalance, and then we had this consolidation. With this drop lower, we drop on the 1 hour time frame, and let's see. I think my main mistake was based off the 1 hour time frame, and this is where I think I should or going forward I will be trying to correct. So what did we see? Price had swept all those liquidities, had a drop lower, this drop lower. What we created is a mini change in state of delivery, and I think all these, I said a mini change in state of delivery also in my Telegram when this candle closed below this one. And so at this point in time, that's where we took a position. The market pushed deep into our drawdown because our stops were above these liquidities that were swept. We were never swept out. The market consolidated, but then again I noticed at around 14 the market closed, right? This market closed at around 14 and opened up at around 18. We have a gap of 4 hours, which is also a reason why it's very ideal to avoid trading these Monday holidays, which also, if you go check from the other 20th Monday, I realized it's usually a break that happens from 2 p.m. to 6 p.m. New York time. Then what happened? We dropped lower, and then we immediately reversed after sweeping seemingly all these liquidities. But where did I kind of get it wrong? Trading, number one is trading a bank holiday. Then number two, I based my entry off a mini change in state of delivery, right? Because you can see we didn't really have any fair value gap. Immediately this candle closed below this. To me, it's a bearish change in state of delivery, but I considered the wrong bullish up close candles. So instead of considering these mini ones, I should use these main ones that led to the sweep of liquidity, right? This is the bodies, or this is the price leg that led to the sweep of these liquidities. So the main or the high probability change in state of delivery would have been wait for candle closing below this swing low, which actually didn't happen. If we were waiting for that, that couldn't have actually happened, and that could be a no trading day. But we entered with that mini, which is a reason why not. It's always, losses are not bad, right? Off losses, we learn on where we went wrong and where we can get better. And at this point in time, after the sweep of liquidity, now I can tell that instead of considering the many changes instead of delivery, wait for the actual change instead of delivery, and then engage with a price. Also, bank holidays, avoid them, wait for the next days, because I think you could have maybe saved some of the energies for that day, for the next day, or do other activities. But because kind of we were excited to be trading after the weekend, we got an L, which is not really bad. We learned from that, and also we keep on we keep our heads high. So as of today, what are we really expecting? We've seen that currently the market is reacting off the immediate rebalance. We have the previous week's high, which you can target, and also we have the previous week's low paired with that weekly fair value gap, which we can target, right? So I don't know, I will mark up the previous week's low. There we go. So we have the previous week's low that if the market indeed is bearish, that's the first level we can expect to see price deliver to, then into the fair value gap. So if we go back to the daily time frame and seeing that we're reacting off the weekly immediate rebalance, what we're seeing is currently price isn't really respecting these immediate rebalance. Price rejected of it yesterday, but we can see today opened, then we rallied higher. Currently we have swept the previous day's high, and also we have relative equal highs. So we'll be watching what price is doing around this bearish context area. which if you are bearish, want to see some nice displacement. But if price disrespects these and starts displacing higher, then we can expect price to be pushing higher. And the first target before even the previous week's high, we have this rejection block, which we can be targeting, and I will be telling you why of the lower time frames, right? Of the lower times, of the lower time frame. Last week we were targeting these highs, but we want to see how price utilized a level like this and then went the opposite way. So the main context area is this daily immediate rebalance. We want to watch how price reacts to that. If price doesn't displace lower, then we can now anticipate higher prices, and the first target will be this target. Maybe the second target will be this one, then the final target, the previous week's high. But I'm expecting to see an expansion going higher. So if we get a trade around this point in time, maybe go with 2 trades, a 1 to 2, and also another one targeting these all-time highs. But for now, let's monitor the context area. Around the context area, this daily immediate rebalance, I want to a fair value area. I will be using blue. So if you will ever see a blue line, just know that's a fair value area. So right, weekly immediate rebalance, price tapped into that on Sunday, right, where the market opened around here. We pushed higher to the context area of which we want to see displacement. We also have a fair value gap that should do its job by pushing or acting as a catapult to push prices off these fair value gap towards these lows. But what we can see is price consolidated inside that fair value gap on the bank holiday, and as of today we are expanding higher. And what you can see is we have created a change in state of delivery. We have created a market structure shift. We have also created a fair value area because we have price leg number 1, 2, and 3. So that blue line to me is a fair value area. And so with this price action, I'm not really intending to see higher prices. No, I'm not really intending to see lower prices, but expecting to see higher prices. So if I can label this as the first target, and to answer why that is my first target, we will consider what happened last week. We'll consider what happened last week. Remember, this was the target that we were targeting this previous week's high, but the market pushed higher. You can see the market only swept this rejection block, didn't sweep these liquidities, then we displaced lower, right? So something like that. The market can sometimes use rejection block liquidities, then drop lower. Again, that's why I decided we can have our first target before or at around this level. And also, if we manage to have another second trade, maybe we wait until we see these relative equal liquidities are being grabbed. But as of now, since we are seemingly disrespecting this bearish fair value area, can we expect to form a fair value gap of which the market will react into, then push higher? Let's wait and see. But if that actually don't happen, how can we react to price? So 1 hour, what we are seeing is the fair value area is overlapping with this 1 hour fair value gap. Currently this market is displacing higher, which we can find to ask ourselves, is the market likely to push higher without us, or what is the market likely to do? So at this point in time, we can be patient and wait for this 4-hour candle closure and see how the market reacts. We have 3 hours before it closes. Could the market drop, react off the fair value area and continue higher? We don't know that until a price has proven to us whether that is likely. And also, if we drop onto the lower time frames, what we are seeing is fair value gaps are being left open, which is not a good thing. If fair value gaps were being filled, an example is this other fair value gap overlapping with this level, then we could have given, maybe we can engage with price going higher, because fair value gaps are being filled. But for now, we have fair value gaps left open. The market is expanding higher, and a possible 4-hour fair value gap that is yet to be formed. In this case scenario, to me, I'll just wait and see how price reacts, and then maybe engage to the first target, and then see how price will be pushing to that level, that previous week's high. So that's what I will be watching as of today, whether we form that fair value gap. If not, see how in between here I can look for an entry. But for now, nothing is really clear of the 1 hour time frame. Don't want to maybe engage at this point, and assuming we engage, and also be mindful of the stop losses, having our stops there. That wouldn't give an ideal 1 to 2, but let's wait and see. Let's be patient enough, wait and see how whether price will drop lower, then give us a clear a clear price action of the context area, then we engage going higher. So until then, that's what I'm watching for. Hopefully that will print out, and we can get to maybe get the move. So until next time, guys, be safe.